In this video, I want to elaborate more on the gold miner leverage. As you know, gold miner leverage is defined by this formula, which is this value divided by the market cap. So how do you interpret this? If the gold price goes up 10% from here to here, then the value of the company goes up, for example, by 20% if you have 2 times leverage. So that's how you interpret this. This company, Soma Gold, currently has a leverage of 8. So that's 8 times leverage. So if gold goes up 10%, then Soma Gold goes up 80%. That's how you interpret this. But that's only if the gold price goes up and everything stays equal. And that's where this video is so important now. What we don't accept yet is that the gold price is not the only variable that changes. If gold goes up, that means there's inflation. That also means that the all-in sustaining costs goes up, right? As you know, there is this chart where gold goes up and all-in sustaining costs moves together with the gold price. So to account for that, I have introduced a new value, a new parameter, and that's called the inflation adjusted leverage. So what I'm doing here is if gold goes up 10%, then I calculate that the all-in sustaining costs will also go up 10%. So this way we will have calculated in the inflation of the cost. So applying that to all these gold miners, I have created this very nice chart. The blue line is the normal leverage that I always use. So 8 times leverage for Soma Gold. That's this point. Now the orange line is the inflation adjusted leverage. And this accounts for all-in sustaining costs that go up the same percentage as the gold price goes up. And here you can see that for some of these companies, like Serabi Gold, they have high leverage, but inflation adjusted, that leverage drops very low then, because they are high cost mines. High cost mines have low margin, and the all-in sustaining cost will go up more than the low cost mines. So for example, there's a low cost mine. I think the lowest cost mine should be Artemis Gold. And you can see here that there's not a lot of difference between the inflation adjusted leverage and the normal leverage, because this is a low cost mine. Okay, so that's important. If you have a high margin or a low margin mine, it will change the inflation adjusted leverage. So actually the orange line is the most important line now. And as you see here, most of these miners are below 1, so they have negative leverage to the price of gold, which means if gold goes up, then the price of these companies will go up less than the price of gold. So it's better to just buy gold if you are below 1. These ones here are a bit above 1, but yeah, it's not worth the risk to buy these because it's almost 1. So you could just buy gold instead for the leverage. But when you move more to the right, you will get to the highly leveraged mines. And this is where I want to buy some companies because they provide real leverage, even inflation adjusted. So which ones do I like? Yeah, Aura Minerals, of course. Um, Monument Mining, I have that one. Argonaut Gold, not sure. They have some problems, but this provides a lot of leverage. Uh, I like Metals Exploration, but I can't buy it. It's on. I've tried to buy it, but it doesn't work. Step Gold. I think I'm going to start buying this after the acquisition, but we're not sure yet if the acquisition goes through or not. We will see. Probably second half of this year. Rio 2 is not financed yet, so this is interesting, this one. If it can get financed, then this will provide great leverage to gold. Soma Gold, of course, still own that. Hummingbird Resources is a bit of a high cost mine, but if gold really goes up, this one could provide a lot of leverage. Cerrado Gold I wouldn't touch because they are not financed, not permitted yet, so their balance sheet is also highly indebted. So this one might get high leverage if the project goes through, but currently it's not permitted yet. So that leaves only Soma Gold, Monument Mining, Step Gold. Those are the great ones. Aura Minerals. Mako Mining is not bad, but the leverage is not that great anymore. Too high market cap. Serabi Gold, very interesting, but they have a lot of work to do. Let's see if they can do it. And these ones you could just ignore because inflation adjusted leverage is below 1, so there's no reason to buy these. You can just buy gold instead. So that was the video. Think about this. Think about the inflation and what it means to the all-in sustaining cost. So buy high margin mines. That's important. High margin mines, low cost mines. I'll see you in the next video. Bye.